assistant is with us as well. Just click OK on your screens, guys, if you're seeing any type of pop-ups. No problem. All right. So let's have a look at GU. Let's understand what's going on in GU. So first and foremost, you guys understand it's Russian doll. It's Russian doll every single time. If you're not familiar with my Russian doll concept, just understanding what's happening in the bigger picture, making sure that you are on point, understanding what's happening on every single time frame, so that you can have your bias and you can understand how far, things may go based upon higher time frame analysis. All right. So this is GU. Now, if I zoom out of GU, you see that just a minute ago, have a look. When I was looking at GU just a minute ago like this market was looking like it was kind of relatively going sideways. Okay, just based upon what's on my screen, on the bigger picture, it looked like it was relatively just going sideways. But when we zoom out and have a real look at what's going on, we can see how this market has been losing strength since 2004. All right, how this market has ultimately been doing this. Okay. This is important to understand the Russian doll theory, to understand what's happening on a bigger picture. And a lot of traders do not do this. They just, because they believe that they're day traders are trying to get in and out of the market quickly, which you are. All right. What happened back in 2003 is not going to be that relevant to what is going on now. Yeah. However, you have to understand that that is the larger Russian doll. That is what is happening on a bigger picture. When I say Russian doll, what do I mean for the people that are just seeing this on YouTube and can hear me talking about Russian doll and they're Googling what I'm talking about? Okay. Russian doll is, conceptually a theory to understand, okay, how the markets work. The markets work with a higher time frame bias. Yeah. All the time. There's a higher time frame bias on any market that you're looking at, on any time frame. So when you're looking at the markets, you need to understand what is happening on those higher time frames, and you need to always keep it in mind, because it's a problem with traders that halfway through a trade, they fall in love with their trade and they forget what's happening on a higher time frame. So when their trade doesn't keep going and go into space, they're confused. Oh my gosh, why did it turn around here? Or I should have taken my profits there. But you didn't understand that you was looking at this time frame here on the 15-minute or 5-minute, and then this market came up and slapped his head on the larger time frame that it is contained within. Yeah, and all of these time frames are contained within this one, and all of these time frames are contained within this one, and so on and so forth until you get to the much larger time frame. Now, can these markets change? Of course they can. Can they break out of one of these time frames? It's possible. Yeah, but unlikely. It's less likely, I should say. Not unlikely, it's less likely. It's more likely that it's going to keep to a higher time frame narrative. All right. Now, this market here, for example, GU, we can see that this market has been bearish. Yeah, since 2004 or 3 or whatever, maybe the market's been making lower lows, and lower highs, and lower lows, and lower highs, and lower lows. And ultimately, we're saying maybe lower highs and then lower lows. And the market will continue to do what it has always done forever and ever and ever and ever and ever until it decides to do something else. Okay, until it decides to do something else. So that is the bigger Russian doll. Now, could this market decide to start breaking up here and do? Yeah, of course, things happen in the world. The world changes. But if we're turning around and saying that since 2007, the market has been making lower lows and lower highs and lower lows and lower highs and lower lows and lower highs, I mean, I'm going to stick with that until it does something else and shows me that it's no longer doing that it's making higher highs. All right. So let's drop down to our daily time frame and understand what's going on from a daily perspective. And from a daily perspective, we can see that the market was bearish from this here, making lower lows and lower highs. I'm going to make it a different color so we can see it. It was making lower lows and lower highs. And then something happened when it got down here in October 2022. The market came up against a huge amount of unfilled orders. Yeah, there was lots of demand in this area that decided to start pushing the markets in the opposite direction, where it started to actually break daily structure bullishly. Now, where is daily structure? Well, when we've drawn in this line here, understanding this push down here, this daily structure becomes these levels, these levels becomes daily structure. Okay. And we can see that the market came and pushed past that daily structure, started to making higher highs, higher lows, and higher highs, and continue pushing back up to the top of this range. Okay. That's what we can see. So if we was to draw another line here of what's currently happening, I would draw the line from down here like this. Now somebody's saying to me, Jay, why have you drawn the line like that? Why haven't you drawn this line, like this or whatever it may be? Well, I've drawn the line like this because I am touching the lowest point before the highest point, because this is bullish. So I want to touch this data point here before this highest point. Okay. If this pushes up higher than this, that will become the new highest point, and this line will change. But at the moment, the market was pushing up all the way up into here, and then the market from here, from this highest point, pushed all the way down here, breaking some structure. Have a look at the structure that it broke. Breaking these levels. Breaking, let me zoom in. Someone's on the iPhone 1 and they can't see. All right, so let's go over here. Look. The market broke this structure. Broke this structure here, okay, and got to this point here, started to go sideways for a little while and decided to push back up. So it's very easy that I can turn around and say that right now this market is trading within this high. Give me that a bit smaller. Trading within this high, trading within this range. The market is trading within this range. All right. Is it bullish? Is it bearish? Well, the market was pushing all the way down here bullishly, breaking structure. After it breaks structure, we understand we're going to see a retracement. The market has retraced and pushed all the way back here, but hasn't broken this structure up here yet. It got to around about 50% of this impulse and started to go sideways as it started to decide what it wants to do. The market got about 50% of that impulse, maybe a bit further than 50%, and started to go sideways. But there's a few things I'm noting. It hasn't broken this structure up here. Okay, it is also still touching our higher time frame Russian doll. Yeah, we're still up against that line right now. So I'm going to be, and my biases are based upon this higher time frame narrative, that I'm interested in selling from the top of a range. I'm interested in selling from the top of a range, of any range. Yeah. And I'm interested in buying at the bottom of the range, any range, whether that's bullish, bearish, or sideways. That is my knee-jerk reaction, because I want to sell in a premium. I want to buy when things are on a discount. All right. So that is consistent. Yeah, that is a consistency whenever I'm looking at the market. But that alone doesn't allow me to just get into the market. The fact that we're up here doesn't mean I'm just hitting the button for a sell, because I need confirmation. I need to actually see the market showing me that that's what it wants to do. At the moment, this market here, have a look. If I understand that the market is pushing down bearish here, if I was to, even though we're trading within this range, which I'm going to draw as a big box between here and here, and I'm going to make it a different color. Okay, blue. I can see that within that range, we've had an impulse looking like this. Once again, why have I drawn my line like that? Well, I've drawn my line because I'm touching that last low here before this highest point. Yeah, and if I wanted to, I could make a range saying that the market is trading within this range. So that's on the daily time frame, meaning every single one of these candles are a day in time. Now we're at the top of the range. I'm interested in selling this market. Okay. However, I can't just say, okay, because of I've drawn some lines on my screen, I'm hitting the button for a sell. I cannot. If I drop to my 4 hour, now I'm going to get more detail and see what's actually happening in this last leg of what's going on. Well, we can see over here, if I was to say that this was a range that this market was trading within, which is kind of like this, kind of trading within this little range here. This could potentially be a bit of a liquidity grab. Could be. I don't like the fact that we've had this little wick over here, which maybe I should put this as the level over here. But this could be a little bit of a liquidity grab. Because on a smaller time frame now, I've gone down to my 4 hour, we can draw in some more lines because it is a Russian doll. Every time I bust open another doll, I see things happening within that doll. Yeah, I see other little structures happening within that doll. All right, and we can see how this market here, okay, pushed up into these levels, and on a 4 hour time frame, there is some structure here. There is some structure, that visible structure in here. Okay, probably the next one's going to be, we can look here and start seeing some other structures in here. And the market has broken below this structure here, broke, in an indication of where it might want to go, closing some imbalances. We've seen a correction coming back up into these levels. Now, ultimately, right now, if I was to see this market come down and close below this level here, that might be a continuation. My only concern is that continuation hasn't broken outside of this Russian doll, which is these two white lines here. Yeah, hasn't broken outside. So even if right now this market comes and closes below here, which gives me an indication, correction, continuation from my bigger blue Russian doll ceiling over here after a potential liquidity grab, I do not know whether this market is going to be able to bust past this white line. I believe it should, but I don't know. I will know when price breaks outside of that market, indicates, breaks some structure, corrects, and then continues. Well, then I'm over the moon, because we've now have a look at my larger time frame. We've now price broken outside of this market, and we're indicating, correcting, continuing, and breaking structure, and we're at the top of the range. And from a much bigger perspective, I'm hoping that trade from the top of the range, that blue line, keeps falling all the way down, hopefully past this blue box. All right. But either way, we're looking at it like we're in the top end area of this range, this so territory. All right. And the market's breaking down structure and we're coming down there. So even from here to here is a big trade. But ultimately, I want to see bust all the way straight through here and bust out this blue box and keep going to hell. All right. But like I said, I can't will it. Can't just get in the trade based upon, what I want it to do. I have to wait and see. I have to read and react to what it does. If I drop to my hour time frame, you'll get more detail. Look what I said and how I've drawn it in here in regards to some structure. Yeah, and maybe might even been able to squeeze even here also some structure. All right, because if I was drawing a line, which I tried to do on a larger time frame, but as you get smaller time frame, you can see it was slightly off. You can see how this market is making higher highs, higher lows, higher high, higher low, higher high. Then the market pushed down here, went sideways for a little while, then boom, broke structure, indication of what it wants to go and do, because it broke this structure, indicated, corrected, continued, and then the market started to push down here in this level. We've seen it come back here and start to go sideways here, but at the moment it hasn't quite broken this previous little structure here at the moment. All right, now I'm not turning around and saying that I'd be trying to get in here on this smaller time frame. But this here possibly was a liquidity grab, and we've seen the market run in the opposite direction. Is it going to continue running forever for all time and start pushing down there? We don't know. We don't know whether this market is finished its little run bullishly. But I'm saying my overall bias is that I really would like to see this breaking down bearish for me to be able to get in for a sell. All right, so let's have a look at this. So this is on the hour time frame. You can see this market has broken some structure, making lower lows, lower highs, lower lows, lower highs. Now at the moment, I don't want to see this break above this level here. Let me show you. I don't want to see this little push that's going on right now break above this level here. I don't. However, I'm also very conscious about this. I'm very conscious that these red folder news and this PPI stuff that's happening today can have an effect on the US dollar, meaning that this potential little push up in this level here, even if it did start to do a madness and break slightly above here, as we can see some reasons it might want to do so. Have a look. Whenever you hear me say reasons, I'm referring to imbalances. I'm referring to, draws, liquidity, reasons why, let me get rid of this, reasons why the market might want to push up here. Well, I can see on an hour time frame, have a look. A nice bit of inefficiency in here, i.e. imbalance in here. Okay, if I was to, I can see some more. Let me label this one imbalance. And remember, if you're not good at spotting it with your eye, okay, then you can use the tool, and the tool here is this fair value gap by Spaceman BTC. And look, can you see? You can see it highlighting green over this imbalance here that I just drew in. Yeah, because there was an imbalance in there. All right, and there was also a little one I was just about to draw in here. There is a little one in here that I saw with my eye. So there is a reason this market could have a little extra bit of volatility and see it push up into this level and then continue to hopefully on where I believe it's going to go. But I am very conscious of 12:30 that there's going to be PPI and all of this red folder news. Lots of red folder news bundled in at 12:30. So I'm expecting to see some volatility. Now, what do I do about that volatility? I either stay away, let it settle down, okay? Or I close my positions or protect my positions before it kicks off. Meaning that if for whatever reason I got in a trade and we start to see it break down nicely, all right? So at the moment we're getting this little impulse that's happened here, which is a bullish impulse, okay? And if we're turning around and saying that, look, this is the hour, I'm on an hour type, I'm not even that small. Yeah, I'm quite large. This is our structure. This market is pushing up within this range. Okay, from being bearish, from potentially capturing some liquidity. From up here, I'm gonna try and make these some different colors so your eyes know what I'm talking about. All right, so from potentially this market being bearish from up in this structure here, breaking some 1 hour structure, making lower lows and lower highs and lower lows. The market got down to this level here, couldn't violate this structure down here, okay, and started to slightly push up. But as you can see right here, we haven't broken this minor structure as yet, haven't closed above here, definitely haven't closed above this swing structure on an hour time frame. So I don't want to see it break above here. It might do a little wicky wick into this imbalance, because this is a little bit of inefficiency there. If it wicked up here and then closed back down here, I would understand. I'd still be waiting for structural break, indication, correction, and continuation before I decided to potentially say I'm going to get in here for the sell. Or if the markets start doing something else, because one thing we know about the markets, the only thing we know about the markets is we don't know what they're going to do. So if for argument's sake, I'm sitting here waiting for this to not break this kind of structure and it starts to go nuts, it starts to break structure up here, it starts to push up in this level, this direction up here, that's fine. Doesn't make me an idiot. It just means that my idea of what I thought was going to happen is not playing out. And there's a million reasons why it could possibly not be happening in a way, because I'm a day trader zooming in here on a smaller time frame. I'm inside of my Russian dolls. All right. So therefore, inside there's lots of activity. It's not to say I'm a swing trader looking at this from a daily or weekly perspective, and the market starts to do something mad in one day. It's not going to do something mad in one day, because this GU market only moves a certain amount per day. All right. But within that range of what it moves, it can be volatile. It can decide to go up first before it goes down, down before it goes up, go sideways for the whole day. Okay. So looking at this chart, I'm going to place some alerts. First and foremost, I'm going to place an alert below this little bit of structure right here. Add an alert. Crossing down. I'm also going to add an alert if that market goes and gets up into this imbalance. All right. Because if it does push up into that imbalance, what I'm going to do is I'm going to drop my time frame down from this hour down into my 15-minute, or better still my 5, and I'm going to see if I see a break of structure happening nicely up here, and I can get a very small entry up here on the basis that the market's going to get back down to this bottom white line. Okay, but even better still, break through that white line and continue to target structure. Okay, yeah, so initially if I get an entry all the way up here, I'll be saying, okay, I'd be targeting structure. But ultimately, for this market to get through this structure, because of my higher time frame bias, which is that we're up against this Russian doll, and really the market should be bearish. Now, if it's not, that's fine. I don't take it as I'm an idiot. I just take it as I cannot get into these markets without having some sort of story, some sort of narrative, some sort of idea, some sort of reason why I'm doing what I'm doing. All right. I'm reading these candles just like if you was reading a book, and I'm trying to interpret what's going to happen in the story from the words that I've read. Everything left is facts. Everything left is, I know this happened in the story because I've read it. I know that she married the butler. You know, I know that the dog died in chapter 2. I know that they drove the car, down towards the stately home in chapter 4. I know this information because it's factual. But when I'm at this page right now, I'm at chapter 6, and I'm trying to predict what I think is going to happen in chapter 7. That is just my opinion based upon the story that I've been reading. Oh, I think she's going to fall in love with the butler. Why is that? Well, on chapter 4, they made eye contact and this happens and that happens. And, in chapter 3, the husband thinks she's having an affair. So I believe that, yeah, she's doing something with the butler. But it's not fact yet because I don't have a crystal ball, and nobody in the markets have a crystal ball. Though they might turn around and say, yes, this is happening because of this and this is happening because of that. Well, they're showing you what they want you to see. They're not correct every single time. Otherwise, there'd be wizards. Yeah, reading the future, making gazillions. Forget about billions, gazillions they'll be making, because they know exactly what's going to happen in the future. But evidently, that's not the case. From your favorite gurus, they're evidently not gazillionaires. They evidently can't read the future. They may have an edge, meaning that when you flip your coin or when you've got a dice, you shaved off one side of the dice so that it rolls on 6s more often. But it's not going to roll on 6s every time. It's just giving you an edge. Okay, so we have an edge by being able to understand and read these markets, because somebody else would not have come to any type of conclusion about what the market has been doing and what it may do. Someone else doesn't understand what they're looking for to actually enter the market. Somebody doesn't understand, the difference between guessing and getting confirmation. At the moment when I'm looking at this market on an hour time frame is making higher highs, ever so slightly, over this minor structure. Well, it's not. The market is still trading right now. For us to look at it within this range here, for us to draw some lines, it's kind of within here and here at the moment. From breaking structure, making lower lows, lower highs, and lower lows, the market is trading within this lower high and this lower low. This is market structure and price action and the fundamentals of understanding what's going on in these markets. If you cannot do this, cannot look from the bigger picture, forget about some mad kind of strategies that you've been using when they're coming in looking at volume profile or looking at this or looking at that, telling you about consequent encroachment, and they're telling you about this. Forget about that. If you can't get in the car and understand where to put the key and what, it's accelerate, brake, clutch, from right to, you don't understand the basics. It's no point me teaching you how to handbrake turn or teaching you how to 3-point turn. Doesn't make sense. This is all you require to understand market structure and understand why right now I'm sitting around and I've placed alerts either side here, and there should be one up here, I believe. No, I'm sorry, so it should be up here, which I can't see for some reason. Let's put it back. Let's try and put it back. Add an alert. Crossing up. Hit create. All right, there and here. Now, if I zoom in to what's going on right now, I can get more information, but it still is bound by what I think on my higher time frame. So have a look. I've jumped in my 15-minute time frame. We can see that this 15-minute impulse broke some structure because the market was coming up here. Look, making a higher high, making a higher low, making a higher high, came back down, made a higher low, and then we've seen this higher high that's just occurred. So that is an indication above this level here. Have a look. All right, because maybe you can't see it, but you're going to be able to see it when I drop my time frame down smaller, but you have to be able to see it in all capacities. All right. One thing I want to say to you is don't get sucked. Don't get swayed and influenced by the colors of the candles. The colors of the candles are can be misleading. All right. But the bottom line is you have to look at the structure, look at the flow, look at the flow of price. Look at the flow of price. Look at the flow of price. Now, right now, this push up here, this last push that I've just drawn, is an impulse that has broken some structure. An impulse that's broken some structure, an impulse that's broken some structure. It's an indication. Same way with the same strategy, we're waiting for indication, correction, continuation. The question is this going to correct and continue like this? Or is it just going to start to do this? Well, I don't know. At this stage, from the 15-minute time frame, I do not know. If I drop to my 5-minute, which is the lowest that I really want you guys to be involved, I don't want you getting any lower than 5-minute time frames. We can see here, if I draw a line in, an impulse, it's not a great line. This impulse, this bullish impulse looking like so. Why have I drawn the line like that? Because I'm trying to touch the last lowest point before that highest, that little tip over there. Okay. Now, I can see the structure, but it's going to be a bit more difficult for you to see it if you're not well versed, unless we drop the time frame down. And just for this conversation, I'm going to drop my time frame down because we'll be able to see structure sitting in here, sitting in here, sitting in here, sitting in here. But that's going to be on a smaller time frame. Now, I don't necessarily need to rush and get myself involved up here, because even when I get involved up here and I get a nice entry here in a 5-minute time frame, my first concern is, are we going to bust past this impulse? Which we may not. And we have to understand that this market might decide it wants to just correct and continue back up in this level. I think it's less likely, but it's very possible, especially with all this news happening at the moment. Because remember what we drew on the larger time frame. Let me get rid of this because it's taking up eye space. Was this imbalance? This market could decide to push up in here. Don't get twisted, and close this imbalance first. And that would be a wick above some market structure, but it would be explained based upon this happening. And sometimes when we see this news happening, we might see volatility happen before the event, not just at 12:30, before the event, of institutions pricing in what they believe is going to happen. Remember, the institution, they're not sitting down there just like, it's one guy in his laptop. They've got a whole floor of analysts that have analyzed the US market and already have a very good opinion of what they think PPI is going to come at us. I'm talking about guys that have got thick glasses, corduroy suits, and white socks on, that have been sitting behind a computer for the last however long, and they have come to a conclusion of what they believe PPI is going to be here. This information that makes up PPI is information that can be accrued, can be evaluated, and they can come to some sort of conclusion. Obviously, they still don't know until the actual, it actually comes out. But within degrees, if you're paid specialist with how many years experience to analyze these markets, you probably have your own opinion of what percentage PPI is going to come as. And therefore, you can price in these things sometimes prior to the actual event. It's not like to say this is just going to be a speech, yeah, and we're going to get man standing up and saying something wild in the speech that nobody expected. No, this is scheduled information that can be priced in. All right. So even right now, I'm watching this and I'm just saying to you, on the smaller time frame, which, like I said, maybe you can't see the structure. I'll show you it on a 1 minute. On a 1 minute, can you see that? You can see the levels that I've put it at, the structure. Look, higher highs, come down here, made a higher low. That's a little structure. Came back up here, made a higher high, came down here, made a lower low. This is structure. Pushed up here. This is the last bit of structure over here in the 1 minute time frame. So right now, once again, on a very small time frame, price is trading between here and here. And prior to me drawing these green dots, the price is bullish. And what do I say about the markets? The markets are going to continue doing what it has always done forever and ever and ever and ever and ever until it decides to do something else. So it's been going up here bullishly, bullishly, bullishly. It's going to keep going bullishly until it decides to do something else. Something else meaning breaking some sort of structure. And that's on a 1 minute time frame. But I've just showed you zooming all the way into the 1 minute from like out here of the same strategy over and over and over again. And then the confirmation I'm waiting for is A, I want to be selling from a premium or buying from a discount. B, I want to make sure that I am in line with what's going on with a higher time frame. If I'm trading against the overall much bigger trend, I want to know where potentially that, that impulse may stop. I want to be able to see structure being broken, giving me an indication of where one wants to go. Then I want to see a correction, which is giving it the opportunity to say, nah, actually, I don't want to change direction. But then I want to see a continuation to confirm, actually, no, I actually do want to change direction. So at the moment on a 1 minute time frame, I haven't got that yet because I want an indication below some level of structure over here. Look at it if I go to my line chart. I want to see some sort of break of this structure here from this impulse, breaking this structure, giving me indication, giving me correction, giving me continuation. Even then, when I take that trade, I've got to be wary of this trend line and therefore looking left to see some structure to see whether or not I think that price is going to break through that structure. I want it to break through this structure, which is my first Russian doll. But then we have to start looking at the other Russian dolls. But after it breaks through the structure and price breaks outside of that market, then is price going to break this structure? Okay, great, it breaks this structure. Okay, then let's look at a bigger Russian doll. Is price going to be able to break this structure in here? Because look, on the bigger picture, remember, look at that gray box. We're trading within that gray box. Okay. So is price going to start? Let me go to my 1 hour. Is price going to start pushing down here and breaking this structure? All of these structures are also, if you're in the trade and you're profitable, TP levels. And based upon your entry of how small your entry is, you can decide to take your profits or protect your position at these levels of structure. But ultimately, from an overall picture, if this market starts to do what it's supposed to be doing, and this was just a liquidity grab above some sideways action right on our Russian doll, the ceiling of our Russian doll, this blue line, well, I'm ultimately expecting this market to go to hell. Yeah, start pushing all the way down there. When it gets down to this line here, which was one of our Russian doll trend lines, you see it? I'm going to be concerned looking left, asking myself, is this market going to break this level of structure? Where is that structure? That structure is here. It's this whole energy over here where I can see the markets couldn't break through, couldn't break through, couldn't break through, couldn't break through. It's this whole energy. Is this market going to be able to put, and by the time it gets down here, it's going to be down here sitting on this white line. And I'll be there either protecting my position or taking my profits or, praying to the pip gods that the market can break through that level and continue bearish, at least back down to the bottom of this box that I drew. I mean, by that time, this is a absolutely huge trade. Oh, yeah, but the whole point I'm saying to you, I'm showing you my story, my narrative of why I'm saying what I'm saying. And then I can zoom all the way down into the 1 minute, which where I just was, giving you, explaining the story. If that story doesn't come off and something else happens, they throw a spanner in the works. Oh, it wasn't the butler that she's having an affair with. She's having an affair with her stepbrother. And everyone goes, ooh, never saw that coming. Well, then that is what it is. If something happens and it does something mad and this just goes boop, and we've seen a massive candle for 1,000 pips go up in the sky because the PPI information was crazy, came out mad, like wild, beyond even analysts' expectations. Well, then it is what it is. That's why we manage our risk. That's why we're not in trades higher with a higher risk than we're willing to lose, because that can always occur. If that was the case, your favorite guru who knows everything about the markets, why don't he go full tilt into his next trade? Why don't he put 80% of his account into his next trade if he knows everything? He doesn't, because he doesn't know everything, because the markets can do what they want to do. But what happens is when we start trading, we have these expectations that every time we take a trade, we're supposed to win. That every time we sit in front of our laptop, the laptop's supposed to cough money towards us, because this is what is shown to us on social media and YouTube, etc., etc., etc. If you was a fly on the wall of your favorite guru, you'd see how much losses that they take. Yeah? you'd see that more than likely, you know, it's only a handful of trades in their career that has allowed them to have the lifestyle that they have, because it's taken them to the next level. But look, we can see here, price has come up to that level here. Price has broken outside the market, and price is potentially going towards some structure that we said on a smaller time frame, which was 1 minute, which is very small, not where I want you, okay, but potentially going to break that structure and give us some sort of indication of what it may want to do. And once it does that indication, I'm expecting to see some sort of correction, potentially correcting into some inefficiencies, some imbalances, etc. And then I expect to see some sort of correction and some sort of continuation. Now, though I might be like, oh, look, Jay, you could have just hit the button up here. Yeah, I could have, would have, should have, maybe could have hit the button up here, but it would have been based upon what? Would have been based upon nothing. Would have been based upon me just, you know, not having my confirmations. Yeah, I want my confirmations. I'm not FOMOing into trades because I thought, oh, because I call this. This has only happened over the last time. I said, look, up here, this is the area that we want to potentially be sitting on this bigger blue Russian doll structure. But I can't just hit the button based upon a blue line that I've drawn on the screen. Someone's going to say, yeah, but you can see a reversal candlestick over here pattern. Yeah, maybe. If that's your confirmations to see this candle here at the top here, to just hit the button and get in on a trade on a 1 minute time frame, well, by all means, live your life. You know, that's fine. But not for me. For me, I want to see structure broken. And I don't mind waiting. And I don't mind making my zone slightly bigger. Because I could have just seen this little doji candle here on this blue line and said, yeah, I'm going to hit. I'm hitting. But that isn't a lot of confirmations. That is me rolling the dice. All right. So right now we're seeing this going in the direction that potentially we wanted it to go in. All right. And I want to know whether or not we're going to break outside of this little structure here, this low. Yeah, even though the market kind of went sideways in this low, are we going to break this structure? And then are we going to have any type of retracement back into these levels? And that retracement might be a small retracement, or that retracement might be larger. On the 5 minute time frame, I can see a little bit of imbalance here. I can see a little bit of imbalance up here. Look, if I put my fair value indicator on, we can see, a little bit of imbalance up here, a little bit of imbalance here. All right, it's even identified a smaller one in here. So maybe if we break some structure here, we might see this market pushing back up into these levels. Whether it's going to be this green one, all the way back up in here, or maybe there's smaller imbalance on a 1 minute or 15 minute, who knows? So that would be the correction. And then a continuation coming here would be the market continuing. And if I do take that trade, I'm still going to be quite concerned when we get down to this white line of whether or not we're going to break it or not. If I don't want that concern, look, that's it, breaking the structure on a 1 minute time frame. If I don't want that concern, I can wait till this Russian doll's floor is broken. And then I can try and take a trade. But at that point in time, the swing high is all the way up here if I'm placing my stop in the safest place. You see, if this market retraces here and then closes back down here, if I wanted to place the trade in a kind of safest place, I could just still decide to put my stop above here. I mean, that's only 11 pips. All right. If I want to be very, very aggressive, yes, I can place my stop above the last high. But I said to you, I already said my concerns. Because remember, if I place a stop here, for example, imagine it turns around, makes a small little correction, and I place my stop above this level. This market could start going in my direction, could touch my white line, and then it could decide that it wants to come up here before doing this. It could do, because it still wouldn't have broken this high. So the market structure and price action is still lower lows, lower high, lower lows. This is the risk that you run when you take an aggressive entry and your stop is not above a kind of swing high. All right, but have a look on a 1 minute time frame. We can see some structures being broken below this level in here. Okay, below where that push happened. Okay, this big impulse happened because the market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then a big push happened up in here. Okay, and then it started to come down. It's just broken below where that big push started from. All right, small indication. All right, small correction. Really, I'd like a bigger correction up in these levels, but at the moment we're just watching. If I wanted to, I can place another alert here. crossing down. I'm going to take off this because it's making my charts like a disco. There you go. And I'm waiting patiently to see what may or may not happen. And I'm always thinking about the fact that we are going to get active in the next 3 hours and 36 minutes. Yeah. Or prior, it might happen prior to that because this is going to be pre-market. All right. 12:30. The US market hasn't opened officially. Okay. Yeah, that's that. That's my breakdown of what's going on. Have a look. Potential correction coming in here after, breaking below this first little level. Potential wick up in here. Let's see, look at on a 5-minute time frame. Have a look on a 10-minute time frame. Yeah, closing this little bit of imbalance that formed in here. Let's look on a 15-minute time frame. No imbalances on a 15-minute. 10-minute is the border. All right, so potentially have a look. We can see over here that this market had a little retracement back up into our 10-minute imbalance. There's going to be some imbalance in here. Or let's go to our 5-minute. There's a little 5-minute imbalance in here. We had a little whip up into that level, closing some things. Is it going to keep pushing up to go and grab some of these other imbalances up here? Like you see those other ones are gone now because this market's closed it. Is this one here? Is it going to come up in here? Or is it had enough and it's going to come and close down below that wick? On a 1-minute time frame, we're looking at it like this. Is it going to come and close down below that wick? If so, maybe you might turn around and be like, okay, I'm going to take this trade, but I'm going to be risk off. I'm placing my stop all the way above here for 13 pips. If you are taking this for 13 pips, you want to be able to at least see 26 potential profit. All right. You want to at least be able to see a 1 to 2 of this market coming down into these levels of potential profits. So coming down, you're talking about getting at least to this blue line over here, which I believe is very, very possible based upon the higher market structure, etc. All right. So understand where you place your stop. Let me get rid of this. Where you place your stop is going to, warrant where it is you're trying to take the trade to, because you don't want to be taking trades for 1 to half. You want to be taking trades that have at least got a 1 to 2 profit margin. Or if you're taking this trade a lot more aggressive, well, then that's different then, isn't it? Because then look, that same 1 to 2 is looking like a 1 to 6 if it gets all the way down here. All right. So it just depends upon how you decide to enter the trade. Remember, one is going to be a safer way, okay, with less chance of you getting stopped out, and one is going to be higher risk with higher reward. All right. That's it. That's how it works. All right, it's your choice of how you wish to take that trade. Okay. Let me see if I can. Oh my God. 1 second. 1 second, guys. Apologies. Where is my Zoom? Can't see. Where's my share button gone? Where's my share button? Where's my share button? Where is my... Sorry. I don't know what just happened. Yeah, I'll press something. Can you see my screen again? Should be able to, hopefully. Can you see my screen again?
Yeah, I can see it.
Thank you. All right. So, we're looking at this over here. And the market made some slight indication below here. Candles just about closed below here. Made some slight correction all the way back up over here. And have we got a continuation? Did that close below? Let's have a look to see whether that closed below. It's tight. I don't know if that's a close below. Is it a coinky that closed right on this line here? I don't know if that's a close below, but it hasn't broken this minor structure, that wick high over here. It hasn't at the moment. I'd like to see a close below these levels, to be perfectly honest. Yeah, which it just, like I said to you, when you see this happening here, I was wondering to myself, like, is this a coincidence that I'm waiting for a continuation, a closure below here, and this closes right on the line? Like, I mean, was it playing with me? Does it know I'm looking at it? Yeah. So I'm waiting for a closure below this level on a very small time frame. But on that basis, you have the ability at that point in time when you get a closure there to place your stop above swing high, which is safety, last high, which is very, very aggressive, and you could get stopped out. Now, what I would say is this: even though I'm waiting for time, look at the time. We've got 1 minute and 16 seconds till 9 o'clock. 9 o'clock is a landmark. Remember, I spoke to you about time. So I'm not going to be out here taking a trade based upon an 8:58 or 8:59 close when I can wait an extra minute and see what's going on. Because a 9 o'clock close is going to be solid. There's 9 o'clock close is an hour close. It's a half-hour close. It's a 15-minute close. It's a 5-minute close. It's a 3-minute close. It's a 2-minute close. It's a 1-minute close. It's got all of those confluences of all of those time frames. But I don't need to rush in here right now and hit the button at 8:58. If I see this market coming down here at 8:59 to do something, and I see a closure is definitely going to be down here, well then yeah, that means that's me hitting the button snap in line with time confluence. All right, but at the moment, especially when this candle here didn't even close, is right on the border, I can wait. Got 46 seconds to see what's going to happen. Is this market going to say, you know what, I'm not ready to close below here, Jay, and I'm actually, as you thought, might want to go up and push up to a slightly higher, you know, capture a very small, there's a little, see a little liquidity up in here? Have a look at it. That little green, maybe I want to go at 9 o'clock, have some volatility pushing up here, boom. If it does, there's a potential small entry in here on a very small time frame if it takes its time, breaking structure, or you're going to wait for it to come and close back down below this level. Simple. Got 15 seconds. Doesn't look like it wants to close down below there in the next 15 seconds. So let's see. Let's see what happens in 8 seconds. We see if we get any volume pumped into the market. But that's the 9 o'clock right now. Let's have a look at that candle. Oh, oh, oh. Oh, oh, oh. Is it reaching? Are we reaching up there? We might be reaching up there to that little 10-minute imbalance. Let me write that. Let me draw that 10-minute imbalance in there because it keeps moving every time I change the time frame. All right. Waited. Like I said, there's nothing here that's told me to get in this trade. Furthermore, I've seen a wick that's broken above this smaller wick high. So there's nothing here now telling me in regards to things. On this larger time frame, maybe. Not really, because all these wicks. All right. On the 3-minute time frame, nah. All right. So I'm thinking to myself, maybe this market wants to push up in here. This is all correction now. And maybe on a very, very small time frame, there might be an entry up in here for a continuation. But at the moment, I'm easy. So again, I'm just going to pop an alert over here. Add an alert. Crossing down. I'll add a little alert over here. Crossing up. And that's it. I don't need to look at it no more. Go and have a look at USA. See what's happening. Straight away, even though I haven't broken it down as such, I've drew a box in previously and we're right up against the top of that box. We're right up against the top of that box. Now the question I asked for me is even if this market wants to come down, could it push up first to capture some nam liquidity? Right? So because of that liquidity potential of even if the market wants to come down, it might first push up. Especially as we know that there is news at 12:30, I'm not going to be taking any action until I see some real breaks in structure. Yeah, until I see some real breaks in structure because of that concern that we're at the top of this box. And yes, it's sell territory, but if the market is deciding that it wants to now, rock and roll bearish, we've got this equal high, we've got this equal high in here. Maybe the market wants to eat that liquidity first, even though we're at the top of the range. So I can't necessarily buy into the top of the range. It's not something I want to do, not unless I see an indication, correction, continuation. All right. If I go to my hour time frame, see we can see some structure. Okay. You can see some structure. I can maybe draw this line in a bit better as well. Yeah, still pretty rubbish. Okay. You know, higher highs, higher lows, higher highs, higher lows, higher highs. We've got this wick action coming down here. Who knows what that was about? All right. That was yesterday at 7 o'clock. Okay. But then ultimately we see the market coming back in here sideways and trickling over here. So, you know, let me drop my time frame down and have a look at this market. All right. Now, if I was to draw some lines in here, my line would look like probably like this. All right, touching this last low before this highest point, and the market is currently trading within this high point and this low point. I don't like this wick over here. It's a bit mad. This little wick here. It's a bit manipulation-y, volatility. Something happened here. All right. So I'm watching this market. If I drop my time frame down to 15 minutes, I'm looking at the fact that the market was going sideways in here for some time. And it's pushed up bullishly. Just got a GU. GU's pushing up, yeah, up into that little level. Or push. This was where the imbalance was. On a 10-minute time frame, is pushed past that imbalance. Let's have a look at it on a smaller time frame now. So this is the 9 o'clock. People sat down here. Remember GU. All right. So therefore, London session. Okay, you know, people sitting down, actually finished their coffee, deciding to do something. So we've pushed him. We've closed this imbalance right now. All right. Let's have a look on a larger time frame if there's anything else this market could be reaching for. I remember we was watching to see whether or not, I said this is all going to be correction, whether or not we're going to get a continuation. So there's no reason for me to jump in right now, apart from watching and seeing what's going on. We're at the top of this blue hair Russian doll. Is this market going to come and close above this level? Because I previously said that the market's trading between here and wherever that low was previously. Okay, so we're watching it. It's just come and close that imbalance. I'm watching on a 1 minute time frame. You know, it's not giving me that much information because it's happening quickly. But the question I'm asking myself is right now, is this market going to continue pushing up? Or is it close its inefficiencies and it wants to decide to start turning around? I do not know. All right. But it's all exciting that we can watch it and see what's happening. I just want to see whether or not this market is going to stick within this structure and not break this high. At the moment, it's going for it. And I said we're going to be wary about this, anything that we see in this market is because of this. And because we understand that things, especially when man get to the desk now after having a long night last night, and they say, okay, PPI is happening today. This is what we think about it. We think it's going to dump. So prior to that, let's push up in the opposite direction. Let's price it in for the day. These things can occur. All right. So we have to just be conscious and be able to read and react. So now this imbalance is gone. Delete it. It's gone now. Look, we're getting a big wick rejection here on a 1 minute time frame from this level. Is this now going to start coming down? On a 1 minute time frame, we can't see too much structure in here. All right. So, I don't want to drop any smaller because it's unnecessary. But on a smaller time frame, we would be looking for same thing we look for. Yeah. Look at the structure now in the 15 seconds. You can see higher highs, higher lows, higher highs, higher lows, higher highs. So therefore, this would be the last bit of structure here that ultimately I'll be thinking, if it's going to turn around now, I'll be waiting for an indication, breaking this level of structure, correction, continuation. Now, I'm definitely not telling you to be down on the 15-second time frame. I'm just saying it's the same over and over and over and over again. It's the same thing I'd be looking for. It's the same strategy. It's just understanding these bigger pictures. Like right now, I said that we are, if we zoom out now, remember, certain times when you're trading, you have to just zoom out, just refresh your eyes. Remember what's going on. We said that the market is ultimately making from here, trading within this high range, that high, and that low. It's allowed to come all the way up to this high without breaking it and would still be, have a look, if I go to my 4 hour, making lower lows and lower highs and lower lows and lower highs and lower lows. It's allowed to come all the way up to here and kiss it on the lips without breaking it and closing above it. Now, that volatility, we might see a spike all the way up into these imbalances. And then it doesn't close above that level and starts coming back down here. These big wick rejections possible because of the news that's coming out. So though we're looking at a very small time frame, the market is allowed to push up into here. And if it did push up into here, it'd be at the top. Have a look. It'd give me even more confidence because it'd be at the top of a range. And I'm always interested in selling from the top of a range. At the moment right now, if you really want to go there, we're kind of in the middle of a range. In the middle of this little white, these two white lines, these thicker white lines, kind of in the middle of those two white lines. So though I'm sitting here and we're looking at a very small time frame, I told you the 1 minute time frame, especially when there's news coming out, is where all the dead bodies reside. The higher time frame, this market is allowed to push up into these levels, and we might even see some additional volatility capturing this imbalance that we saw here on the was it the daily time frame? No, 4 hour. 3, 2, 1. On the 1 hour time frame in here. Okay. I mean, it exists on other time frames as well, but this is the one I'm just trying to see which one that I drew it on. Yeah, the market might decide that it wants to see some volatility. Boom. And if I see a big boom up into this level, then I will be able to drop my time frame down and get a lovely entry from up there if I can see structure breaking. I think I've already got an alert there. Well, let's make sure. Yeah, I have already got an alert there for a few of them, it looks like. If I right click alert lines, you can see all of these lines I've got in here. See? These are my alerts. There's 1, 2, 3, 4. One I just made a mistake. I did another one on top of it. 5. Get rid of one of them. Don't need this one. All right. And if I want to hide those lines because it gets too much visibly for your eye, just right click it, get rid of them. So that's what my prediction is for today. So either we're going to start seeing it rolling right now, which is from a 1 minute structure, possibly not, or possibly we might see this happen. You know, possibly. Yeah, we might see a wick up into this level to close some of this imbalance above this high, capturing the liquidity above this high, nam, and then and that will be the trade. Alternatively, on a smaller time frame that we were just looking at, which is more noisy, more full of trickery, you know, more issues. I mean, it might do both of these things. Have a look from the top of this range. Look, breaking some smaller structure. Look what we spoke about. It might do both of them. It could break the structure, as we've seen here. Look, the market's coming here, breaking this level, making it a potential indication, correction, continuation. It might start coming down here and then boom, fly back up and go and take that 1 hour imbalance. It could do both of them. But I know if I'm going to get entry based upon a 15-second, 1 minute kind of entry, I have to have 15-second and 1 minute targets. I can't have delusions of grandeur that market's going to keep going forever and ever and ever. Amen. So you start looking at structural and different targets, smaller targets. All right. Because now we've seen price here right at the top of our blue line again. Yeah. Remember, I don't know if it wants to go and take out imbalance, or I don't know if it wants to respect this little trend line that we've drawn in here in regards to the previous trend. But I'm reading and reacting to what the market is doing. All right. I'm reading and reacting to what the market is doing. So right now the market is trading within this little level here and this high here. All right. It's broken some minor structure, which has been in here on a smaller time frame. And we've seen some wickage. It's kind of tight. All right. But potential indication, potential correction. Is it going to be a potential correction, continuation down here? Watching it, we can see some imbalances. We can see some reason why the market might just spike up in here. You can even see a gap. Okay, but that's on the 1 minute time frame. But just understand, every time I'm dropping these time frames, I'm not giving you a new strategy. I'm giving you the same strategy, just on a different time frame. Yeah, just zooming in and seeing it at a different time frame, but the same strategy. All right, the same understanding that the market moves with structure, the market moves with rates, within ranges. All right, the market likes to close imbalances. The market trades towards liquidity. This is the same for all things. Okay, have a look. And I'm on a 15-second time frame now, but it just allows you guys to see price action instead of us standing there looking at it on a 5-minute time frame, waiting for 5-minute candles. And these sessions be very boring, just sitting down there quiet, looking at 5-minute candles. All right, it's just showing you how the markets move, how the markets like to close imbalances, how the markets go sideways, how the markets, I'm showing you the strategy in a sped up way. By zooming down. Now there is definitely more noise, more volatility. If something happens in the news, we're going to see a huge spike on the seconds and 1-minute time frame compared to who's looking at the 5-minute, 15-minute time frame. I want to see no huge spike. Oh, looks like that was an indication. Coming up here, tapped into our imbalance, and then look, continuation coming down here on the 15-second time frame. In the next 1 second, let's have a look. Yeah, it's close. Didn't quite close on the 15-second time frame. Didn't quite close below these levels. Yeah, but we've seen it wick below these levels. It's showing me it's indicating, it's pointing that it wants to go in this direction. It does. Let's get out of this 15-second time frame. Look at it on the 1 minute. On the 1 minute, you can see how the market's making lower lows, lower highs. Or making this, not lower lows, making structure coming down. But it's quite difficult to see where that structure is breaking on a 1-minute time frame because this was such a fast push up into that imbalance that we identified. You see? You see how we're reading these candles? All right, over here now, let's have a look. I don't like this closure because we want to see a closure below these levels. And this was the new wick. This is the new level, this wick over here. I want to see a nice closure below it, right? But either way, we wouldn't be here on our 15-second time frame because we can see how, look, maybe it didn't finish on the 15-second closing that imbalance, because on a 1 minute, see, on a 1 minute, the imbalance is all the way this whole block here. So the market's come back up in here, still doing its correction. All right, and this is what I'm saying to you in regards to understanding that the lower time frames are treacherous because of the activity. Yeah, so this is potentially, but it's not really, but not on the 1 minute time frame because we can't see any structure in here on the 1 minute. To the market at the moment, if anything, if this now pushes above here, this would create some structure here. If this market now pushes us above this level a little piece, but then I'll be able to go and change this like this, because now this would provide some sort of clear structure on a 1 minute time frame. At the moment, because I'm not able to do that, and this line's actually here, on a 1 minute time frame, there isn't clear structure in this push up. It's just green, 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 green. No real corrections. There are, but on a smaller time frame. These wicks coming down here is a correction, but it's just going down to smaller time frames. Yeah. So that market has just gone in here now and it's closed that 1 minute imbalance. Let's see whether we're going to get a closure down below this wick. Are we going to get a closure below this wick is the question. Is the questioning. Are we going to get a closure below that wick? All right. So just understand, I hope we've gone through it. We've gone through it thoroughly of looking at this Russian doll, looking at this higher time frame. Understand that when we open up our charts, we are starting on this higher time frame. Our charts are clean. We're going to go all the way out to as far as we need to go out, just get a bigger picture of what's happening in this market. This market is, even though we can see everything happening, it's overall a bearish market. It's been making lower lows and lower highs historically. Okay? Historically. Now, at the end of the day, this market is allowed to come all the way back up to this last high. It is. Because look, if we draw the flow of the market, this was the last high. So even though it's come down here, made us ever so slightly lower low, the market is allowed to come all the way back up to this last high, but without breaking it. So that could mean another little push up in here. Even if it had another little push up in here above that structure, once it doesn't break this level, it's still a bearish market. All right. And then we zoom in and zoom in and zoom in, and we're just looking for reasons of why we, to confirm of what this market wants to do. On a daily time frame, we're here, and I drew this little box in because the market was ultimately going a bit sideways here, up against this ceiling, which is this blue line. Yeah, up against the ceiling over here. And then we saw this little nam potential liquidity grab above this little sideways action. that maybe now we're expecting to see our market turning around after that liquidity graph, running in the opposite direction. Let's have a look. See what's going on here. My alert just rung. Let's see what's going on. Did we get a close below? We've got a push below. We've got 6 seconds, 2 seconds, 1 second. And on a 1 second time frame, this is giving us a indication, correction, continuation off of some 15-second structure. You know? You see, on a 1 minute time frame, it's hard for us to be able to see the structure in here. Now, if we went to a smaller time frame, 30 seconds, you know, we'd be able to see some structure in here. All right, we just don't need to be down here, but it's just me showing you that the strategy is the same over and over and over again. It doesn't change, it's the same. You don't need to change anything, you just need to understand how the markets move, how they flow. When you see a big massive red candle and you're trying to get in for the sell, you don't panic. You're like, you know what, I know how the markets flow. It's very, very likely the market's going to come back up in here and close this imbalance, so I'll wait till then. Yeah, because if you was to draw an impulse of that big red candle, you'd be selling at the bottom of the candle, at the bottom of a range. And we don't want to sell at the bottom of a range, do we? We want to wait till it gets back at the top of the range when that imbalance is closed to get in for the sell. Or better still, to wait for our indication, our correction, our continuation, confirmations before we just hit the button. Yeah, I hope I'm painting this picture for you guys and making you understand these markets more and more. Because even if you're getting just a little bit, a little 1/4% every day, 1/4% every day, 1/4% every day, you understand what I'm saying? Even if that's what's happening every single week, that means you're getting 1% better, 1.25% better every single week. That means every single month you're gonna get what's that, 4 or 5% better. That means in a year you're gonna get 60% better. You understand what I'm saying? Like, that's you getting taking 1/4% every single day and for improvement. God forbid you take up 1%, you get 1% better every time we look at something. So this is what it's about. It's not necessarily about I get everything right now. No, I get a little bit now, and I'm gonna keep getting a little bit, keep getting a little bit, keep getting a little bit until I have a lot. All right, guys. Good morning. Good morning. Good morning. God bless. It's 9:20. I'm going to see if we can put something on that's going to give us some information about the world, some sort of education, maybe about something new, opportunities, etc. And I'm going to wish you guys having an absolutely fantastic day. Go and fulfill your potential. All right, go and try and do those things that you didn't do, that you've been putting off, etc., etc. I've seen a few things already that's just caught my eye. Well, we can look at something. We can look at something in regards to the state of the UK, in regards to the government being racist, or we can look at something in regards to capitalism is finished, by that guy who we saw speaking the other day, who's from Ilford, who was a trader. Well, there's something that's quite interesting here. OpenAI's new AGI robot stuns the entire industry. Let's watch that first and have a look at something that's going to probably give us a little stun us, all right? And see what's happening in the world, how technology is moving forward.
Step into Work Studio, the web platform.
We have to be ahead of what's going on in this world. We have to understand what's happening in the world so that we can take advantage of it or prepare for it. Have a look here. We didn't get the correction broke structure here. So this on this very small time frame is not necessarily breaking down anymore. This is a higher high indication. This is a correction now, and this is potentially a continuation of this market possibly pushing up into these levels. Okay, but remember, that's on a very small time frame. In a time when we're looking, there's going to be red folder news hitting like absolute crazy in the next 3 hours. All right. So this is why we stay. This is why the recommendations are is you don't go below 5 minute time frame, because on a 5 minute time frame here, you're looking at this and you're looking for structure, and maybe only about over here you can see 5 minute structure, which this market hasn't closed down below. So therefore, you would be doing nothing. You'd be saying that the market's trading within here and here, and you're going to wait till the market either does something else or does something else. All right, because on the smaller time frames, it is treacherous. We may still be correct, but a little bit of, remember as well, we're getting our candles from Awanda. Maybe Awanda's candles are ever so slightly off. Who knows? But we just don't want to be on these smaller time frames because that's where the dead bodies lie. It's good for me to show you price action of it coming, closing imbalances, doing certain things. But from a trading perspective, it's unnecessary you being down there. All right, guys, good morning. God bless. Let me play this. It's OpenAI's new AGI robot that shocked the entire industry. That's what the title says. So let's see. Yeah, before these robots are running up in your house and walking down the street, let's try and see what's going on in the world. All right, guys, good morning. God bless.
While the most surprising